Like Netflix's pivot is for the better and not in a defensive structure. So yes, we back live today. Me and SerJing, we're gonna record and talk about Netflix. As a company, I think there's a lot of interesting stuff going on with Netflix. But more importantly, I think as a consumer and as an investor, there's some sort of difference there that we have to be very clear whenever we invest in something. Right. So if we're a consumer, we can have a lot of fun with it, but is it worth the investment? That's the other side, right? So I think SerJing, you can start off not telling us like what does Netflix do as a product, but the broader business. I think that's something that a lot of people don't understand.
Yeah, sure. So I think when it comes to Netflix, most people today, or at least if you have come into contact with Netflix only in the past few years, would know it as a streaming services provider, and that is its main core business today. But I think what's interesting is that Netflix did not start out as a streaming services provider. In its early days, it was actually sending out DVDs by mail, right? So in the past, people would rent DVDs from Netflix via the internet, and Netflix would then send the DVDs to its subscribers. So it was also operating on a kind of a subscription business, but the subscription was for a DVD by mail rental service. So that was what Netflix used to do. And then I think sometime in 2007, Netflix kind of started streaming. And I think sometime in 2011, it really kind of decided to go all in on streaming and let its DVD by mail business just slowly wither away. I think it's still around, but it's just not.
Wait, is still
It's not.
around?
Yeah, I think so. Yeah, I'm not too sure, but it's.
Serving
I
the
think it's only in
boomers.
the US or something. Yeah, and
Yeah,
it's
yeah.
definitely not something that Netflix management pays much attention to. Yeah, so the focus is purely on the streaming services. Yeah, so I think that's an interesting bit of history with Netflix that I think a lot of new users may not realize.
Yeah, I think the younger people may not even know what is a DVD.
Yeah.
It's like what is an era, right? So
Yeah,
Netflix has fundamentally changed, the way we consume content in a video form, or at least in a highly produced video format, right? So I think even in video form these days, you got to separate out, right? Short form video, community-led video content, and then highly produced kind of video content. So Netflix is clearly in the highly produced side of things, lah, right? But what are some core business processes as an investor we should be aware of?
core business process. So Netflix has, so as a streaming services provider, Netflix provides content, right? Entertainment content, and this entertainment content can be split into both self-produced content or original content, and the other side would be licensed content. So like content that have been produced by other content producers, and Netflix would then purchase a license to show that program to its audience. So there's these two big groups of content that Netflix has in its library. Yeah. So
And
yeah, go on.
continue.
Oh, no, I was just ending my spiel.
Okay, great. Anyway, if for all of you tuning in, if you have any questions, drop in the comment. We'll answer it later because Netflix has a lot of changes recently. All right, so can you kind of walk us through what is their business model then?
Sure.
How do they make money and what's their pricing and all that jazz?
Yeah, sure. So it's a very simple business model. It's a subscription-based business. So it has only one stream of revenue, and that would be subscriptions. So these subscriptions can come from either a user subscribing for the DVD by mail rental service, which is now a legacy and tiny part of Netflix business. And then the other subscription service will be to its streaming services. So Netflix is in, I think, more than 200 countries worldwide now today. But the US still accounts for a significant chunk of its revenue. But it's very much an international business. I think in terms of total users today, it has significantly more users in international markets as compared to the US. So it's a global streaming services provider, and all its revenue just comes from its streaming services. Now, price points vary very widely. I think in the US, Netflix doesn't really, I think you can kind of like back calculate the average revenue per user. Off the top of my head, I don't have the numbers now, but it does vary pretty widely across the world. So I think in the US, I think if you say average revenue per user is probably somewhere in the low teens range per month in terms of USD. But it can go down to much lower ranges as well in other developing markets, where Netflix also recently kind of launched a mobile only plan. So that's that has a much lower revenue per user. Yeah, so there's a wide range of price points that Netflix charges, but I think it's still very much somewhere in the region of, say, a few dollars per month to $20 over per month, depending on the type of subscription plan you're on and the geography you're in.
I think Netflix is making it very hard for content creators like us to charge any higher subscription numbers. Everyone is benchmarking Netflix. It's like how we benchmark the chicken rice $2 downstairs. Okay, maybe $3 downstairs. They have set the benchmark price. But like you've pointed out, right? I'm a little bit concerned, but I don't know if you're concerned that they only have one revenue model. At such a scale, right? Because they're already very big in the US, they're dominant, and there are a lot of competition coming in, right? So are you concerned about the business model in itself, or how do you see it?
Yeah, so I think in terms of the room for growth for Netflix, I think there's still a significant room for growth. I think if you look at like the number, I think in the most recent shareholder letter, Netflix did comment that it has, I think, somewhere like 800 or 900 million broadband households, or like users that it could potentially capture. Today, its subscriber base is slightly over 200 million, right? So there's still significant room in terms of the number of subscribers that it can capture. And then, of course, there's also room for pricing increases. I think Netflix is one of those interesting businesses where it always charges a lower price than it can, even though the pricing has increased over time, but it always tries to charge lower than it can. And that stems from management's philosophy when it comes to pricing increases. So what they really want to do is to deliver value for subscribers. And when they think that the value that they've delivered to subscribers has increased significantly, then that is when they come up with pricing increases, and they try to keep the pricing increase lower than the perceived value that they have delivered to subscribers. And then in terms of the total viewing time, I think people might be surprised, but like, say, if you look at, say, in the US, where it is like Netflix's single largest geographical market, and where it also probably has the highest penetration rate. If you look at that, I think Netflix is still in the low single-digit percentage in terms of total viewing time, right? So so if you talk about, let's say, the total amount of time that people spend consuming entertainment content, right, watching on the TV and so on, Netflix is still only a low single-digit percentage of that total viewing time. So I think from that perspective, when you look at the number of users that could potentially be won, the pricing increases that could potentially be put in, and the potential increase in the total viewing time, I think there is still significant room for the business to grow. Now, you mentioned about that single single revenue stream. So I think that is a kind of there are pros and cons with that, right? So the pros is that with that single revenue stream, management is laser focused on making sure that it delivers an excellent streaming experience, right? So that's the pro. The con is that, if one day streaming just dies a natural death, like, say, in the world of cable, then Netflix could be in trouble. But I think for now, at least, it's pretty clear to me, at least, that streaming is in the ascendancy, right? It is growing, and that's a view that Netflix management also shares. Yeah.
Actually, if you think about it, amongst the FANG, Netflix has the simplest business model. I love how in 3 minutes we cover the business model already. I was like, 没有东西to讲 already. Small content, more consumption, more streaming, more subscribers. Pretty much that's the idea. Yeah. So that's very interesting. But amongst a lot of companies these days, right? A lot of people have all these kind of non-GAAP measures, right? They are not like accounting practice accepted, right? So, and total viewing time is one of those things that is a non-GAAP measure that Netflix and other streamers will hop on. Other streaming providers will hop on pretty tightly. But as an investor, could you kind of help us understand why is this total viewing time so important? Because it appears everywhere. Every analyst use it. Yeah, so help us understand this.
Yeah, sure. So I think when you mention non-GAAP, I think it's useful to kind of differentiate between... so non-GAAP often is used to refer to financial numbers that are not based on what is called generally accepted accounting principles, or GAAP. So if you use financial numbers that are not based on this GAAP, then they call it non-GAAP. So I think viewing time is perhaps not really non-GAAP per se, but more of like just an important business metric, right? That can give us a certain window into the health of a business. So in Netflix case, there's that total viewing time. Now, why is it important? Because I think ultimately, as a subscription business, you want your subscribers to stay onto the service. You want a very low churn rate. And how do you achieve that? You achieve that by making sure that your service is used often and valued by your users, right? And so I think in this case, total viewing time is a good proxy for like the value that users or subscribers can extract from Netflix. So if the viewing time is increasing over time, then I think it's a kind of a good indication that subscribers of Netflix are continuing to see value in the service that the company provides.
Yeah, definitely. And I think in your thesis, right? So for everyone that don't know, I'm actually on the compounderfund.com looking at the thesis at this moment in time. So you should check out the compounderfund.com, which is the fund that SerJing is managing, and look at their thesis, right? So I think you talk about growth in other, like beyond US growth. So we all understand that US forms about 50% of Netflix's revenue and is their biggest market. Recently, of course, with the pandemic opening up in the US, we actually see a little bit of dip of subscribers there, but that one I think more people can understand, because you kind of go out, right, and then you don't really need to pay for this thing, so you kind of unsubscribe. So I kind of get that, and you're seeing the consumption pattern happening in the US pretty in a more matured fashion. Whenever there's a HBO has something, people will subscribe, and then 3 months later they unsubscribe because no more Game of Thrones, right? So you're seeing a consumer habit there forming. But I'm more curious about what is your take on Netflix's Asian strategy? Like, how are they trying to grow in this part of the world? And they coming into the game is interesting, but they are also very big players in this region already, specifically in China for sure, right? But what do you think is their strategy in this part, and what do you like about it?
Yeah, sure. So I think with Netflix, its international strategy has been, I think, pretty consistent based on my observations of the company's growth over the years. So what they tend to do is when they enter a new international market, they will often have a library of like US content or content from other countries that in the world that they already have. They put it in the service, and then over time try to grow the local content library. So as they grow their roots in the country, they will start looking for good content producers in that particular country and get them to produce exclusive content for Netflix. And at the same time, also go out to hunt for existing content that they can license. So it's very much, entering a country first and showing the audience content that Netflix already has, and then trying to localize it over time. So what happens is over the years, the value proposition that Netflix has for users in a particular country would, in my opinion, actually grow, because there is more and more localization over time. Right. So I think that is, in terms of the content strategy, that's what Netflix is doing and has been doing. And in terms of like the pricing, I think increasingly we're seeing Netflix, especially in emerging markets or rather countries that are considered to be emerging economies. Increasingly, the company is pursuing a lower price point for its subscription. So perhaps going like say mobile only, where I think perhaps like the amount of data that needs to be streamed over the web is probably lower. Yep, and also coming up with basically subscription plans that are more suited to people or economies where the income per population is slightly on the lower end. Yeah, so I think that's what they are trying to do. And if you look at Asia, I think there are quite a number of countries within Asia that are considered to be emerging economies, or where the GDP per capita is quite low compared to, like, say, in the US or Singapore. So I think for those countries, in terms of its pricing strategy, it's definitely moving towards lower price points. But what's interesting is I think in the latest quarterly commentary by the company, it did mention that it hasn't really seen the low price points has not really been cannibalizing the higher price points. So in a way, it's kind of Netflix really expanding the pie. So perhaps at the higher price points, there's only this amount of subscribers that can be won. But if it now introduces a lower price point, then that is where you can actually really increase the total number of subscribers that you can get without cannibalizing the higher price points with perhaps better streaming features. Yeah.
Okay. But currently, the price difference is really just on where it can be consumed, right? Not so much about all the additional stuff that will come, like video gaming, like podcasts, and all those things.
Yeah. So I think for
Okay.
now, if you look at and you mentioned gaming, right? So that's one of the new new business lines that Netflix wants to enter. But gaming will not be a separate subscription. It's going to. So for example, I'm a current subscriber of Netflix, and so
I
when the
I, I
game
presume so. You better sign up. You invest so much. So you better be a user. You must love the product, right? Yes.
That's a topic for another day, but we can talk
Okay.
about that.
Okay.
But so as a subscriber of Netflix, when it starts to introduce the gaming feature, if I log on to Netflix, I'll be able to see it there. So it's kind of like it will be kind of like a new content category. So today, if you're on Netflix homepage, they will classify their content according to genre, so like horror, western, action, whatever, right? And then there will be gaming, right? It's gonna be added on to a subscriber's existing subscription at I think no additional cost. Yeah, so it's not going to be a new separate line, but it's going to just be more value that a user can gain from his or her subscription. And I think this again, brings me back to the point I made earlier about the way that the management team thinks about raising prices, which is I first must deliver more and more value for my subscribers before I have the right to go and ask for a pricing increase. Yeah, so I think I wouldn't be surprised if after the introduction of gaming and if it catches on and in terms of like usage trends and so on, then perhaps we may see another round of pricing increases after that.
Yeah, which is always the exciting part. Yeah, but interestingly, you actually believe that Netflix has a very strong balance sheet, right? Which they have a lot of debt at this moment in time, right? And they've
Yes,
been
they do.
building more and more debt to do originals and all that kind of stuff, right? Can you kind of give us a little bit clarity why you think that they actually have a stronger balance sheet than before,
Sure.
despite so
So
much debt?
yeah, sure. So in my case, when I look at a company's balance sheet, I generally like companies that have more cash than debt on the balance sheet. But in the case of Netflix, I wasn't worried despite knowing that Netflix has significantly more debt on its balance sheet than cash. Now, the reason is because I think that there is a very good reason why Netflix has a lot of debt on its balance sheet, and it's because of its content strategy. So I think sometime in 2013 or so, um, Netflix started to pivot heavily towards producing original content. Now, the interesting dynamic when it comes to original content is that you first have to pay cash upfront, right, to produce that content that then is able to be monetized, or rather, hopefully, be able to be monetized over a very long period of time, right? So, what you first need is that investment upfront to create that content. So in the case as Netflix ramped up its spending for original content, beefing up its content library, delivering more value to subscribers, what has happened is that it has had to take on more debt over time to be able to finance that original content spending. Now, so the reason why I think it's the balance sheet is okay despite the debt is because I think that that kind of spending on that original content is actually intelligent spending, right? Is to build an asset or to build a series of intellectual property that can be monetized over a long period of time, right? And if you look at say the churn rate that Netflix has is it's the lowest or one of the lowest among streaming services providers, and it's a very healthy. I think from a monthly perspective, Netflix does not officially release its churn rates, but there are third-party data providers that kind of try to guess that. And most of the numbers that I've seen point to like a very low single-digit churn rate on a monthly basis for Netflix. And what it means also is that the annual churn rate is also very low for Netflix. And so what this means is that it has a very it has a lot of what do you call it, insight into
Stickiness.
the correct, the very sticky revenue. And so therefore it has a lot of ability to see ahead of time, okay, how much revenue will I be able to get in year 1, year 2, year 3, and so on, right? So it has a very good view of like the types of cash flows that it can bring in, and that helps it to be able to plan out the servicing of the debt that it has. right? It also helps to plan out like in terms of repayment of the debt that it has, and at the same time, as the I think over time we'll also be able to see Netflix revenue growth kind of significantly, or rather the cash flows that it can bring in from its subscribers start to significantly outpace the cash outlay that it has for content production. And I think when it comes to that, then that is when it can slowly start paring down the debt on its balance sheet to a less risky level. But I think ultimately the the balance sheet where it has more cash, where it has more debt than cash, is still a risk to take note of, and that's something that I did mention as well in my investment thesis.
Fair, fair. It's pretty interesting how they can have such a low churn and keep raising prices, right? And they have raised prices quite a few times, and I'm like,
Mhm.
wow, people still use it. So it's
Yeah.
pretty interesting. But do you think the landscape has changed now that there are all these new providers that are coming in, and they're not coming in like just trying, right? A lot of them that are coming in now, they come in with the whole war chest, right? So are you concerned?
So I think my answer is slightly nuanced. So what is happening is that Netflix is today, I think, the largest spender on content. I think it's easily going to be spending somewhere between 15 or $20 billion on content production, right? In this year, and that is a phenomenal or formidable amount of capital that anybody has to spend on content. But what has happening is that Netflix has the largest subscriber base in the world, and so what happens is the cost per subscriber is actually one of the lowest, if not perhaps the lowest among all its other streaming services competitors. And so what it means also is that Netflix can spend a lot more in absolute dollars on content and yet still keep costs low on a per subscriber basis. And that's, I think, a very strong and beautiful dynamic that other streaming services providers cannot achieve. So yes, even though a lot of people are coming in hard with a lot of capital, but the sheer amount of capital that Netflix is pumping into the business is something that I think is very difficult to compete with. And I think what's also interesting and important is that Netflix, because it has like a decade long or more head start in streaming, right? Is able to design a better user experience, user interface. That's one, and also has a lot more data on the viewing preferences of users. And I think that goes into like the calculus when the company thinks about what content should it produce, the types of content it should produce, and also like the types of content that it should license and at what price, right? So I think the pricing and the type of content, that's also very important. And I think in the case of Netflix, because of the data that it has on users' viewing preferences, it's able to make a much smarter investments in those areas as compared to some of its peers. So I think overall I'm not too worried, even though there's all this influx of what do you call it, new competitors coming in. And I think, if you look at, say, what Disney Plus has done over the past 1.5 years is phenomenal. They have, I think, today grown. I don't have the numbers off the top of my head, but like just I think they have achieved like the target that they set themselves
For
to
three
do
years.
like it's accelerated by 3 or 4 years, right? The amount of
Yes.
subscribers that Disney Plus can bring in. But at the same time, that also is happening at the same time as when Netflix has also gone on to sign up a tremendous amount of new subscribers. I think based on Netflix latest forecast, I think by the end of 2021, so from the end of 2019 to the end of 2021, in that 2-year time frame, I think Netflix is expecting to win, or rather to have about more than 50 million new subscribers. So that's still that's a substantial number of new subscribers, and that's happening at roughly the same time as when Disney Plus is reporting all its the kind of blockbuster growth numbers in subscribers as well. So I think when you look at that from that perspective, I think sometimes competition, having new streaming services provider enter the arena is not necessarily, I think, a dire competitive threat for Netflix. So I think the overall bigger picture really still has to be about the streaming
Cutting the
services.
cable.
Yeah, exactly. Yeah, so it's I think more about streaming versus legacy television, more so than streamers versus other streamers. Yeah.
Nice. I mean, we're also streaming now. We are on Twitch, by the way, guys. Just saying, we're getting cool. But yeah, so I totally get that, and it's pretty phenomenal because I think for a lot of people when they look at a company, they a lot of time they look at a company. I think for the newer investors, they look at it in isolation. Right, so they look at it in like, oh, Disney is doing so well, so well, so well. But when you broaden it and you see, actually, a lot of people are all doing very well, right? So the broad landscape is all doing well. Everyone's just riding high, and it may not be a winner take all, and it may not be a one provider at the end kind of game, right? So it could just
Actually,
be
I think in most markets, there will be a few winners that will emerge from, even if there's like a huge fight, right, a huge war, if you will. There will eventually still be a few winners. I think that is often the case when it comes to outcomes in the business world. It's never really a case of just one winner. Even in industries where network effects are super strong, like say in payments, right? You have so many winners in the payment space as well, right? There's like Mastercard and Visa, for example. Both have done very well, even though they are like literally direct and very fierce competitors with each other. And for full disclosure, my fund also owns positions in Mastercard and Visa as well.
nice, good. Yeah, totally agree. I totally get that. But it does matter like who is the management, right? Who is managing these companies, and then how
Yes.
how, how are we gonna get it going, right? So I love how Netflix is so simple as a business, and they do have a lot of quirky management. So
Mhm.
that there's published all sorts of weird leadership books that are counter corporate culture. So you kind of
Mhm.
walk us through like a little bit of how you think about their management.
Sure. So actually, the study of a management team is a very important part of my research process with the company. So I like to look out for management teams that have integrity, capability, and the ability to innovate, right? So in Netflix case, I think it has all of these ingredients. So I think integrity, if you look at the way that the compensation of Netflix management has changed over time, it's very much roughly in line with the growth of the business in the company. So I kind of like that. I like seeing compensation tracking the growth of the business. But I think the really interesting aspect of Netflix management is just the capability and also the ability to innovate. So I think the company, one very interesting aspect was Reed Hastings, the founder and current co-CEO of Netflix, was interviewed many years ago by, I think it was Forbes magazine or Fortune, can't remember which, and he actually said that we named the company Netflix and not dvdbymail.com for a reason. And that is because from very early on, they kind of already knew and foresaw that the television or entertainment content should be delivered over the web. And that was a time when streaming wasn't in the mainstream lexicon yet, right? And so I think he did not use the word streaming, but I can't remember what turn of phrase he used. But basically, it was describing the idea that the entertainment content should be delivered over the web. And in 2011, I think Netflix management made a move that made me deeply admire them. So earlier on in this webinar or podcast, I mentioned that Netflix business started off as DVD by mail, right? And so that was the cash cow. They were generating healthy cash flows from that particular business. But in 2011, the management decided to just spin that off into a company called Quickster, right? So I think today, if you Google Quickster debacle or something, there'll be a series of articles that describe what happened during that time. So what happened was that Netflix management wanted to spin off Quickster and basically completely cut off the DVD by mail business from Netflix, and they wanted to focus entirely on streaming. But there were a lot of constituents of the company that were not happy with that move, and eventually management retraced their steps and said that okay, we're gonna still keep the DVD by mail business. We're not gonna spin it off, but we're not going to spend a lot of our management resources on that. We're going to be focused on streaming. And I thought that was really interesting because I think first, it's really rare for a business leader to want to just completely cut off its existing cash cow and focus on where it thinks the world is going to go in the future. So I think that's a hallmark, a very strong sign of a management team that has its eyes firmly on the future. So there's this I think overused quote in the world of business that I think originated from this ice hockey legend called Wayne Gretzky, right? Which is that you should skate to where the puck is going, and not where it has gone to, right? So the idea is that Netflix management team wanted to skate to where they thought the world would be heading towards, which is a world where entertainment content is delivered mainly via streaming. And so I thought that was a very strong sign of an innovative management team, and the fact that they managed to pull it off with aplomb, judging by the number of subscribers they have today, the revenues base that they have today, right? More than 20 over, I think something like 25 or 26 billion in trailing revenue today. I think that's a very strong sign that this is a company that's executed very well. And so there's that capability portion, and then the innovation portion is really like oftentimes we talk about companies riding on tailwinds, right? You can say, oh, I'm riding on the e-commerce tailwind, or I'm riding on the streaming tailwind and whatnot. But I think there are categories of companies where they are the ones that are creating the tailwinds. And I think in the case of Netflix, it is such a company. It essentially created or brought the world's attention onto what streaming can be, right? So it created that kind of tailwind for itself and has been riding on it. So I think that is one of the things that I really like about Netflix, which is just the strength of the management team and how it has grown the business over time and how it thinks about its competitive landscape. So on the competitive landscape topic, right, this is something that I often bring up whenever people talk about Netflix with me, which is that when you think about competitors, you often think about other streaming services providers, right? But to Netflix management, that is not the case. So many years ago, the Netflix management team actually came out with an essay called The Long-Term View, or is it The Long View, something like that. And in it mentioned that they talked about their view towards competitive forces as well, right? And what the company mentioned was that competition actually isn't just streaming services providers. It's actually anything that you spend your time not on Netflix, right? So if you're exercising, if you're watching a movie on, say, Disney Plus or Amazon Prime or something else, or if you're streaming music instead of watching a show, if you're playing a computer game instead of watching a program on Netflix, that is competition, right? So any activity that you are doing besides streaming on Netflix, that is competition, right? And I think that's also a very interesting way to think about things. That is, I think, not common, right? But what I really like about the aspect is that when you have such a broad view about what competition really is, then I think it becomes harder, or rather the chance that Netflix can be disrupted by competitive forces from different angles is actually lower, right? Because I think it's harder for the company to be blindsided. And I think that today you see the company trying to venture into gaming, right, which is not really related to streaming at all. But if you think about the way Netflix frames competition, then I think that move into gaming makes very strong strategic sense, right? Yeah. Oops. Sorry.
It's okay. Cool. Yeah. Very excited about Netflix. I get it. So yes, every time a company does a big pivot, I do think video gaming is a big pivot because there's a whole operational process that needs to come out, for Netflix, right? It's not like just a new genre of shows or something, right? There's a whole ops that comes out, and they have actually hired quite a guy to come into the team, right? I think Mike Verdu was from Facebook, used to be in EA, Atari, and whatever, right? So they brought in quite a leading person in the space to come in. But every time a company pivots, some investors will like it, some investors won't, right? So I'm sensing that you like it, lah. And can you kind of walk us through in your view in a little bit more detail, like why do you think this is a good move for Netflix based on their business model?
Right. So Netflix business model, as I mentioned earlier, is subscription based. And how do you maintain a healthy subscription business? Is that you really want to continue to capture the attention of your subscriber, right? So in this case, if you can introduce gaming and if it works out well, then there will be you capture more attention from your existing subscriber, and it increases the stickiness of the product, right? So I think from that perspective, it excites me that Netflix now has another avenue to improve the stickiness of the product that it has for subscribers. And I think and the other interesting aspect is that because Netflix is a pure subscription business and it does not see gaming as a new subscription line, although in the future it may, just kind of spin off gaming as a new subscription service. But for the time being, because gaming is really seen as an additional kind of a customer acquisition and customer retention tool, what it does is it frees up the games and Netflix, it frees up gaming developers that Netflix works with to really kind of let their imagination run wild, to really just produce high quality games that can capture user attention instead of having to worry about, okay, how should I monetize the game, right? Because today, if you look at a lot of games, they often have to worry about the monetization model. Do I want to do a freemium model? And if it's a freemium model, what kind of in-game content should I sell, right? And if it's a subscription model, sometimes you also want to have in-game content that you can sell, right? And I think nowadays, and if it's a one-off sale model, then you also have to worry about, how do I generate that kind of recurring revenue? And then the question becomes, okay, what other types of in-game content can I sell if I'm actually selling the game on a one-off model? So there are a lot of trade-offs that I think game developers have to make in terms of between the gaming experience and between the potential monetization models, right? And I think sometimes both of these things can come together very well, but sometimes it's a trade-off that game developers have to make. But in the case of Netflix, because of the way that they are framing the development of that particular business, I think it really just frees the game developers that Netflix is working with to just purely focus on creating excellent gaming content without worrying about the monetization aspect of it. So I think that is really interesting as well, because you never really know what kind of new gaming models that can appear. And I think what's also interesting is that I think in the early days of this venture, at least, Netflix is going to focus on producing games that are related to its existing intellectual property, right? But over time, it may, and I think it's really quite. I'm kind of looking forward to see, whether or not such games can help to extend the longevity of Netflix existing IP, and also, besides extending longevity, could it, increase the overall kind of fan base interaction with Netflix content? So yeah, these are the areas where I'm just excited about with the gaming venture.
For sure. I think it's gonna be very interesting, because sometimes when we play games, right, some of the in-game video dialogues, actually I hope that they could extend it. Right? There could be a lot more. It's like World of Warcraft, like if you play WoW and then you see the Warcraft movie, and it's like, oh dude, this could be so powerful, right? Like they could just spin off a whole franchise, and then you could consume the movie, and then they could ping you to say you want to continue to play a game, connect with your friend or something, right? So it kind of builds up the whole ecosystem. Of course, this is all imagination, right? We don't know how it's gonna come out yet, but to me, it's like, yeah, it's like Disney, it's like the Disney model. You build content, but then you put it into different ways of monetization. So Netflix is doing it in a different fashion, going digital.
Yep.
And I've been telling people, game franchises will be the future, of online content, right? And you cannot underestimate the value of games as a franchise, as a license, as a brand in itself. Yeah.
No, absolutely. I completely agree with you. So so there's a potential for Netflix to build games from its existing content suite. So I think like Stranger Things, for example, could make for a really interesting game. It could be like a Half-Life kind of a game, right, where like you have like horror and action mixed into a game. So that's, I think, pretty cool. On the other hand, if the gaming thing really does take off, you could even see movies or TV series being made from popular gaming franchises that come up from Netflix gaming studio. But all of these, it's still super early days. There's nothing concrete yet when it comes to what Netflix is going to introduce with its gaming arm. So we'll see. But I think as you rightly pointed out, I think the person that is going to head or lead the gaming business has a very impressive resume. Right, and yeah, I think it's a really good hire done by Reed Hastings and his team.
Yeah, Atari so old school. Such a long time ago kind of thing. This guy definitely has a lot of experience. But okay, so all these positive about the management and all, right? But we cannot forget that they did miss out on the Roku avenue, right? So
Mm-hmm.
Roku is the hardware that got like Netflix rejected that idea, right? And then the guys decided that okay, we'll leave, and then we'll just go and do that hardware streaming. It's like Apple. What do they call it? The box. That's how they started. But now they have integrated with most of the TVs and hardwares and what have you, right? So how would you rate management when it comes to missing out on this very big hardware spin-off at a point in time?
Yeah, so I'm not super familiar with that particular history. I know only like a little bit here and there. But if I look at Roku's business model today, it's really about it's very much tied to digital advertising through connected televisions, right? And this is just a very different type of business that Netflix wants to pursue. So Netflix is very heavily anti-advertising. Okay, not I wouldn't say anti-advertising, but it doesn't look at advertising at all as a revenue stream. So interestingly, and I think also in the latest quarterly earnings conference call, there was a question about sports and why Netflix is not pursuing sports. And so Reed Hastings or one of the members of the management team actually said that, Netflix as a company, they are very laser focused on their value proposition, which is on-demand streaming without advertising. So very laser focused. Sports revolves around a fixed time and is supported by a lot of advertising. So it's antithetical to the Netflix business model, and hence it's not something that Netflix is interested in at the moment. Things could change in the future, but at least for a long time in the past and now, it's not something that it's interested in. So in the case of like Roku as well, where it's really just acting as like a conduit for advertisers to be able to do advertising more effectively via digital TVs. So I think from that perspective, there isn't much connection between the Roku business model and the Netflix business model. Yeah.
So and in that sense, you will actually rate the Netflix management better because they have rejected this whole other business model and they are laser focused on it. So they kind of stayed on their track in that sense, because not every opportunity you should pick it up, right? So that's kind of what I'm trying to find out.
Oh, right. So no, sorry. So I kind of misunderstood your question a little bit. So no, I think I am ambivalent on what Netflix management team has done with Roku. I do not have any positive nor negative opinions. Yeah. So my comments earlier were just on like the differences between Roku and Netflix business model today and why these two companies may not be a good fit for each other.
Okay, yeah, that's good enough, right? So I think Netflix has a lot of good things to give people. I mean, it is where it is today. It is pretty big in itself, right? So on the discussion of the modes of the business, right? Maybe I think you already shared a lot of stuff, but is there any other thing that we should know about it as a company? Where do you see it? Why do you think it's very resilient going into the future?
Yeah, so I think in Netflix case, the biggest competitive advantage is really Reed Hastings, the CEO of Netflix. I think he's the smartest guy in the room in the entire entertainment space, right? So he's combining software smarts with digital entertainment smarts. So I think when you have that combination, which is I think rare, I think I think it's harder for competitors to try and compete with somebody like Reed Hastings. I think he is really I think the single biggest competitive advantage that Netflix has. I think everything that Netflix has built today stems from his vision, his early on vision, right? Like Netflix wouldn't have like the 10 plus years of head start in streaming if Reed Hastings did not push the company toward that vision he had of streaming. So everything stems from Reed Hastings, and I think as long as he maintains that kind of laser focus on continuing to deliver and grow the value proposition that Netflix has for its users, then I think the company should be in pretty good hands. And I think there's still a long way to go before there is a shakeup in the streaming services space as well. I think today, in terms of streaming, it's still only maybe about like a quarter or so, or maybe 30%, something like that, of total viewing time in the US or globally. I can't remember which, but the idea is that there's still a lot of viewing time for streaming services providers as a whole to win, right? And I think that and Netflix management has said that perhaps when that ratio flips, now it's say 70-30, right? 30% streaming, 70% traditional TV. But when it flips to say 30-70, meaning 70% streaming or 60% streaming, then that is when potentially you can start seeing shakeouts happening, right? Where the streaming services providers start competing very fiercely with each other to win subscribers from each other. Then I think, but even then, I think when you look at who is likely to have the largest subscriber base and hence the lowest content cost per subscriber, I think Netflix will have to be in the conversation.
Yeah, that's damn cool. Right. So if you guys have any questions, drop it in the comment section. We'll reply you. But I think Netflix is a very simple business model and a pretty good team. And they're just continuously doing what they do. So it's quite a flywheel, right? They're not doing a lot of big changes. Of course, the whole new like gaming thing is a thing, but that's just too early for us to really comment as to like, is this really working or what have you, right? Give it maybe 2 or 3 more years, and then with more data, we can see if that business model actually works. But to sum up today, can you just kind of walk us through what are some of the risk factors that you think Netflix will face, and to you, where is the future?
Yeah, so I think earlier I mentioned about the amount of debt that's on Netflix balance sheet. So I think that is still a risk. Netflix in 2020 started to give a glimpse of I think the types of cash flows that you could potentially produce when it's in a more steady state, when it doesn't have, when it can kind of slow down its original content spending, then you can start really seeing the cash flow starting to generate. But for now, it's still burning. Now cash flow is still not very healthy. So I think that's a big risk to watch. That weak balance sheet. I think generally speaking, when a company has more debt than cash, that always puts it in a riskier position than if it has more cash than debt. So that's one. Then I think that another important risk is really, as I mentioned, competition. I think that Netflix has a very strong competitive position, but you never know, things can change, right? And like you rightly pointed out earlier, right, that there are more and more of these streaming services providers coming in, and maybe for all you know, there could be a very new kind of a new app or something that pops up from nowhere that sucks up users' attention significantly,
TikTok,
and therefore
TikTok.
TikTok.
Yeah.
This is I believe that the Netflix will actually see TikTok as competition as well, right? So you never really know. There's no guarantee that I think Netflix will continue staying on top. So that's one. And then there's, I think, very high key man risk as well. Like I said, I think Reed Hastings is like the competitive advantage for Netflix, and if the company does lose him, then I think for whatever reason, then I think that could deal a very big blow to Netflix. And on the key man risk topic, I think there's another person worth mentioning, which is Ted Sarandos, who's also Netflix co-CEO. He was promoted to the position fairly recently. Prior to that, he was the head of content at Netflix. And I think it's a really smart move by Reed Hastings to promote Sarandos to co-CEO. I think that's one way you can give career progression for somebody who is very important to the future of the company as well. So Sarandos has been leading the content production efforts of Netflix for a long period of time. So a lot of the growth that Netflix has experienced in its content production has really come from the leadership of Ted Sarandos. So I think the fact that he's now co-CEO, I think lowers the risk or the chance that Sarandos would grow bored at his job and want to leave Netflix. So that's that key man risk. Yeah. So I think these are the three kinds of. And I think the last risk would actually be like COVID-19. I think depending on how the virus develops, because Netflix, ultimately as a streaming services provider, its business health actually depends on the introduction of new content from time to time. So if COVID-19 starts to worsen significantly from here, then and if countries around the world start shutting down human movement significantly again, then that could create a severe kind of vacuum in terms of like the original content that Netflix can introduce to users, to viewers. And if that happens, then I think the growth of the business could be affected.
I have to say Netflix's kind of content is hard to produce. It takes a very, very big team and all that jazz. So I totally get what you're saying. It's not like two of us like that. Oh, we just stream in, then we just talk, right? Then let's have a good discussion. And that's it, right? They have a very long production process, and it's
Yes.
international. Right, so I do
Yes.
get it from a production standpoint. It will be
I
pretty
think,
hard.
yeah, and I think actually from or perhaps maybe worth mentioning as to one of like the advantages that Netflix has over its peers is that because it's such a global streaming services provider, right? You know, if you're an aspiring or very talented content producer, you kind of know that, you know, if even if I were to build piece of content that is geared toward my local audience, say like like say a Korean content producer building for Korean audiences, there's a chance also that my content could catch on with many other viewers in across the world because you know, given the nature of the streaming service that Netflix has, I'm sitting in Singapore, but I can watch content that's produced in like the Philippines, in France, in Korea, in any other countries, right? And I think what's interesting also is that Netflix has realized that often the localized content is also able to win an international audience. And I think that's also, I think, something that is to the benefit as well for, as in it's a competitive strength that Netflix has, I think, because it allows the company to pitch itself better to content producers, makes the company more attractive to work with when it comes to, you know, content producers thinking about which platform should I be on and so on.
It's the whole developer ecosystem, kind of like how people build on iOS first, you know, these days. And I never saw it that way, but yeah, as a content producer, Netflix, you should call us, right? So we can, you know, do content for you. Very happy to do that, right? Just hello@thefinancialcoconut.com. Yeah. So yeah, okay. So I think we've covered a lot about Netflix, and for everyone else that wants to see your full thesis, go to thecompounderfund.com, or they can ping you LinkedIn, whatever you. They could probably just talk to you directly if there's a need to. Is there any last things you want to add for us before we sign off today?
No, nothing
Oh,
on my end.
okay, great. So that's Netflix for all of you. If you have any questions, come to our Telegram group. And thanks for joining us. 10 a.m., right? You should be working, but never mind. You join us. It's good choice. So that's it for today. Thank you, SerJing. Take care.
Thanks,
Woo!
Reggie, for having me. Thanks, everyone, for listening.
Bye.